The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We saw pressure in the crude oil market on Monday, down over 4%. That seemingly weighed on oil seeds, bean oil in particular, which translated into a lower soybean trade. Corn and wheat were under pressure as well. Livestock found a little bit of green, though, on Monday. Let's try and dissect this early week trade action. Joining us now for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you. Hope you had a great weekend. And I guess I'll start there. Crude oil down sharply on Monday. A lot of it tied to the Israel-Iran tensions, or maybe taking some war premium out. And I felt like that was a big catalyst to why we saw some red in the grains and oilseeds on Monday.
Yeah, I do think that was a big factor. At least just set the tone in the commodity space overall with a $4 drop in crude oil. Again, challenging. Are we looking at possibly going to some new lows? We'll have to see how this kind of finishes out. That obviously came into play too in some of the outside markets. Dollar index looks like maybe it's trying to top out here, but we'll have to see. We did see a little price recovery towards the end of the day. What's going on with the bond market, stock market rallied off of that today. But yeah, it definitely set the tone in the grain markets. You mentioned soybean oil. That was probably one of the biggest drivers in terms of being tied to crude. $1.30, $1.40 a pound lower today. Just made it difficult for beans to get any traction. And you also got a soybean meal market, and that we got to keep a close eye on. I mean, realistically, we're getting real close to the end of October. And if soybean meal continues this path, this is going to be the lowest monthly close in soybean meal on that front end contract since 2020. So that could be just a little bit of reflection of the supplies that are out there for soybean meal with all this extra crush. So even with the crude oil where it is, beans got a little bit of headwinds against them here with just a burden supply picture. We're wrapping up harvest, good weather in Brazil. Planting pace jumped 18% week over week. Saw that talk of late planting kind of going to the wayside. Throw in a technical picture that looks a little bit dismal right now as we fell through the 9 handle last week. Took another 13 cents off, the 10 handle, this last week. Another 13 cents off today through 9.75. Feels like at least beans right now, the path of least resistance could be lower. Especially if we see those export shipments peak out, which last week was 2.5 million metric tons. This week we're at 2.3. This is the window typically we see those export shipments peak out. So I guess what's the big thing I'm watching? Does that Gulf basis start calming down because they're shipping less beans? And that could be kind of some bad news for the soybean market here in this window. Quickly, corn following suit, obviously. Harvest still full speed there. Just talking to guys, and kind of the buzz today was elevators are full, basis is falling apart. I've got basis contracts I need to make decisions with, or I put corn on quick term storage I got to make a decision with. Those decisions are either haul it home or price it, and that doesn't bode well here, as November typically is a tougher market for corn, especially in heavy supply years like this one, as farmers have to make decisions regarding what to do with those extra bushels or the bushels they got figured out here at harvest.
Thinking about that, you mentioned soybean demand, where that's at. Corn demand has continued here. Another day of export sales on the Daily Wire for corn Monday morning. But to your point, it's more a case watching what's happening, elevators, basis, things like that. So if I'm a producer and I'm being kind of forced to make a decision on corn, should I maybe be looking to price out to get some re-ownership, March, May, July, etc.? I mean, what do you think about what are some of the options in the corn market right now, John?
Yeah, you're true with that statement, dealing with that question. Again, like I said, a lot right now because guys don't know what to do. Now, everybody's situation is going to be different. So individually, where are you at financially? What do you got for storage? What do you get? Where's operating loans come into play? Excuse me. Because if you do move it out to March, the spread did move very nicely in your favor. Got down to 12 cents. Now we're back to 14 cents today. Looks a little bit softer. That soybean spread was down to -3 cents between Jan and Nov and Jan. Now it's back to 12, so you can kind of get that feeling that maybe those spreads are starting to behave again like they're supposed to. So you got to look at where you are now. So obviously, if you got a basis contract, that's a good basis. Maybe we make the pricing move. Do you want to take on 14 cents of roll risk, and then you want to take on the carry risk, versus just pricing the corn out and using that friendly basis or that cost of rolling it to buy a call, something along those lines. Option volatility is still very, very cheap at this moment, so that gives us a lot of flexibility to get some time bought on this market. I'm not a big fan of buying carry, especially in this window. But there is still enough friendly news out there that at least makes me feel like corn market can stay supported. But we got to continue to see that friendly news grow. That biggest one, obviously, the demand side, ethanol grind, strong. Export sales, 9 consecutive sessions with some form of announcement. Now, why isn't the market moving on those? They're not big. Okay, we had the big one from Mexico a couple weeks ago, but they're routine, 120, 130,000 tons. Those are expected, excuse me, and there's nothing above and beyond, in terms of make this market get excited, but it's still a nice pace. And we'll see what the USDA does with it in the November report. Does yield move a little bit higher, which is kind of what my gut's telling me from everything I've heard, but then they can make some demand adjustments to keep our picture pretty status quo.
It's going to be an interesting kind of trade to watch here. And I think about this too. You get to the end of October and just some of that end of the month money movement, not just in the grains or livestock, but just the fund movement, the dollar, stocks, et cetera, plus elections less than 2 weeks away. And I think both of those things together, this could be a week of some uncertainty in the commodity trade overall, John.
Very much so. Not just commodities, just in general in the markets. I mean, staying focused on grains, let's look at next week. We got an election on Tuesday, so the market's going to be digesting that. And here comes the November USDA report right after that. So that could leave a real interesting week next week. The funds right now, in terms of their positioning, they have a very manageable short position. They did throw a little bit more into the bean market last week. Corn-wise was actually decreased that length a little bit, or that shortness a little bit. So they're at a spot now where that market maybe just has, time to wait it out. Then let's go with a plan in terms of what the fund money flow is, which makes me nervous given the supply that we're dealing with. Even if we got good demand at this pace, it still just puts us in a window here that this market has a tendency to kind of could roll over, retest that 385 low, maybe put a fall low in. We'll have to see our harvest low in. The big disappointment for me in the corn market was last week's trade. We ran to 420, 421. That's always kind of a swing price on the charts. Either like we get through 420, we're on our way to 450, or we fail at 420, we go back to 380. Obviously, we failed. Now we got follow through off of that with today's move. Just kind of makes me feel like at this stage, the path of least resistance might still be softer. And there's also one just little wrinkle about this election. There's talk of some front loading happening here. That's maybe why demand is so good, is that they're concerned regarding the election results, and exporters are piling in right now, getting supplies bought, whether it's corn, beans, wheat, cattle, beef or pork, just in case here comes the election point, and all of a sudden now we've got a change in regime, and the market's fearing possible tariffs, things of that nature. Again, that's just market speculation, but it could be one of the things that we are kind of watching now here as, so we get into this election point. There's some of the reason, given the rhetoric that's out there, why Mexico's been such an aggressive buyer of U.S. corn.
Should ask you about the wheat market specifically. I felt like wheat has been fairly soft here in the back half of October. Kind of saw that continue on Monday, so double-digit losses there. Any big notes for you across the wheat trade, John?
Well, we got a little bit of weather news. Obviously, we're forecasting some pretty good rains in hard-red winter wheat country coming up here. We'll see if those materialize or not. Then we got some fairly decent rains in the forecast for the Black Sea region as well. So there's two of the key growing areas in terms of internationally that could be putting some wheat together in that regard. Technically, charts are very concerning. We got a head and shoulders pattern that we formed. We're kind of right at the base of that, which if it does complete itself and we finish the breakout to the downside, probably puts us back to retest that 525 low on that December contract. So that's another little bit of a wet blanket in my mind too for the grain markets and the corn market, and specifically, Wheat was down 9.10 today. Corn's down 5.6 or 4.5 today, kind of in sympathy with that wheat market. Add in the supply side of it, pushing the market lower. It just might be a real tough window for corn futures to rally or hold any gains here, because it's just the path of least resistance, at least with the way we closed, way wheat market's acting, that we could be headed back to test some lower levels here.
Winter wheat, too. I'm just wondering, I know we're going to get crop progress numbers Monday later in the afternoon. Talk to maybe, somewhere around 50% good to excellent on winter wheat, early conditions. Wonder if that could have any influence on the wheat market, John.
It could. I mean, obviously the market's been watching the dry conditions that they've planted that crop in. Where are we at? We haven't seen a lot of moisture come through. That could be setting ourselves up for a little bit of a turn. We'll have to watch what turnaround Tuesday gives us tomorrow. But right now, at least the chart wise and, the forecast and where we are, the demand side still too for wheat, just is still a concern here that, this is a window we typically see the December wheat price kind of fall apart or roll over in on the historical side as well. Just makes me a little concerned right now here in these next 3-4 weeks that the wheat market, corn market, cereal grains in general could be a little bit under jeopardy here.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. John, let's go over to the proteins. Pretty decent day in cattle and hogs, considering the drop of crude, et cetera, et cetera. Let's focus on that cattle market. On-feed report came out on Friday afternoon. Seemed to me like cattle futures were a little hesitant after getting the numbers, but we've seen that before. I guess, what's your assessment of that cattle on feed report and what that could mean for this broader cattle trade moving forward?
Yeah, cattle on feed was fairly neutral, and I think the market actually anticipated that placement number being above expectations a little bit there. I did. When I looked at that 95, I was like, well, that looks like an outlier, so it did come in a couple percentage points above that, analyst expectation, but still at the top end and within the range, so that was enough to at least keep this market staying supported here. Let's still look at the big picture here. Cattle numbers steady with last year in the feedlot, placed less than last year, even though it was above expectations, still less cattle, so there's still the fundamentals are there to support this market. Now, we didn't get a whole lot of reaction either way. Some of it's because this market's getting a little overbought. Then we see a fairly good jump in retail values back to 324 choice carcasses, and all that turn just was from a few ticks negative to a few ticks positive. So it kind of makes you start to wonder, are we at that window that maybe we've hit pushed this as far as we want to here? We got to get through next week's with the election, see what's going on in the outside markets. Money flow funds are sitting around 90,000 contracts on the long side as of Tuesday. So they've obviously have grown that. Now, long way away from a record long, but compared to where we were over the last handful of years, we're up in that top end of the range. So it's a point here where this market could easily take a little breath, probably good for it if we went back and just even dropped down to, the 200-day moving average on December is about 184. That's a nice little correction, $5-6 off the marketplace. Then we can reset and see where we are after we get through the election pace. So I'm still cautious here in terms of if producers got cattle here in this front end, puts are cheap, get you through the election, get you through any chaos that could come from that, or even just some market flow just to check it back out. Now, are we bullish longer term? This 190 area, as you can see, everything's kind of sticking here right now. It's just really difficult resistance. There's a lot of different highs that we've worked through over the past couple of years right here in this area. And so it's just one of those ones, is the market ready to make that move and go to the next leg? Or is it just a picture's cloudy enough that here's where we're going to sit? Still great value for producers. And again, like I said, we've had a nice rally. Make sure we're defensive here going into the end of the year in case we do see some things slow down.
Well, that hog market, a good day there again Monday, getting into some of the mid-80s on some of these deferred contracts. These hogs above $80 now. Demands look fairly solid. I mean, what are you watching in this hog trade right now? Are we getting to the top end here, John? What do you think?
Well, the all-time high on the December hog contract got taken out today. So at 180, 82.5. This market's, or excuse me, 80, 82.5. And, the high was way back at first introduction of this contract was around 80.65. So we're at least seeing that strength there that this says, hey, this may want to go a little bit higher in this window. The other thing I'm watching too, what's going on with the fundamentals? Okay, like you said, demand's pretty good. Retail prices are supportive here. You go look at a retail price chart for hogs, all of a sudden, like 2 weeks now, boom, hard left and up it goes. In a seasonal window where it typically goes down, again, that kind of makes you wonder what's going on, who's buying it, where is it going? Is that front loading again, export purchases? Mexico is a big buyer of pork, obviously. China's a fairly good buyer of pork and beef. Are they getting in here before the election? We'll have to see. The other side of it too, cash index trading a little bit higher, back above 85 today. So that just tells me maybe December needs to get pulled up. Now, typically the cash market starts kind of sliding here. The index historically trends lower into the end of the year. Last year we were trading in the mid 70s, low 70s with that index in this exact same time window. So to me, those factors say this hog market's going to be supported here. You got a heck of a run though. All right. You look at it from mid-August to now, you're talking almost a $16 rally in the hog market. So getting a little anxious, especially when you look where the funds are, the money flow, the straightness of this climb, that a correction could be coming. So if I'm a hog producer, I like the upside. Another great place for puts here. Protect that big rally we've had since August. Keep your upside open, just to get through the chaos of the next few weeks.
John, good stuff. Anything final you'd want to share or reiterate with folks here today?
Keep having conversations with people. Guys give me a call. We just talk out options. What are we doing? Okay, I'm doing this with the corn. What's available to me? And just sit back and make sure you're, planning out where things are going to go. Don't assume the market's cheap here. Everybody keeps saying, oh, everything's so cheap. Well, realistically, if the money flow says it's not, it's going to keep pushing things. So there is still downside risk here. So producers, you guys are plenty long the market in my mind in terms of bushels. I'm still a big proponent of the put strategies on anything we're storing into the spring, just because of that South American weather, the carry in the market, just working through this supply might take a while here. Let your bushels be your length at this time frame, especially if you're going to store them, but minimize or manage that risk underneath. That's, I said that to one guy today, is like, that's risk management. You may not like the numbers I'm putting in front of you, but they could get worse, but at least you've got X taken care of.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, what's the best way to reach you?
Sure. Love chatting with anybody anytime. Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John Heinberg, Total Farm Marketing. Always good to chat. Thanks for joining us. Have a good one. We'll talk to you next week.
Sounds good. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.